Now, another very important section is section 23 capital C. And this is something I really want to bear in mind, because we've always got to remember that no tax stands alone. And very often when we're dealing with income tax, we've got to be very, very aware of what VAT consequences are happening at the same time. And how does 23C help with this? Well, we know that for income tax purposes, what we're trying to deduct here is an expense. And an expense is something that cost us an amount. Now, if I go and I purchase an asset or trading stock with a certain cost, what if part of that cost is VAT? So I go and I purchase trading stock and included in the cost is VAT. Or I go and purchase an asset and included in the cost of VAT is VAT. What happens with the VAT part of an expense for income tax purposes? The answer is extremely logical, and 23 capital C just makes it ever more clear. Because 23 capital C says that if VAT is part of an expense, but that VAT has already been claimed as input VAT, then that VAT cannot be claimed again as an income tax expense. So what this says to us is, if the VAT has already been claimed as input VAT, it cannot be claimed again for income tax purposes. Now, we have to be very careful with this, because we can get some absolutes out of this and say to ourselves, fine, if, for example, our taxpayer is a non-vendor, so they're not registered for VAT purposes, that means they can't claim any input VAT. Then, when we're claiming their expenses in the Income Tax Act, those expenses will include VAT. However, what about if our taxpayer is a VAT vendor? We know from having looked at VAT that there's some assets that, although you're entitled to, the VAT Act says, I deny you from claiming input VAT on these assets. And a very good example of that is a motor car. So if, for example, a VAT vendor purchased a motor car as defined, and the input VAT was denied on that motor car, then when we're trying to write the cost of that motor car off for income tax purposes, that cost will include VAT, because the VAT could not be claimed under the VAT Act. So it's very, very important to have a look and see that if we couldn't claim input VAT in an expense, have we at least left the VAT in as part of the expense for income tax purposes? What we need to examine now is this whole interplay between our specific deductions, 11B Cap A through to Section 11X, and our general deduction formula. So if we have a look at these different parts of the Act where we can claim deductions, we find that there's a very specific process that we have to follow. If an expense is available, or let's just say can be deducted under one of the specific deduction provisions, it has to be deducted there, even if the specific deduction limits the amount of the expense that can be claimed. So let's say, for example, I have an expense of 100,000 Rand. I go to one of the specific deductions. I can deduct that expense in terms of the specific deduction, but it says to me, of the 100,000 expense, you can only deduct 80,000. So I claim the 80,000 of the expense as a deduction. I also find that the same expense also qualifies under the general deduction formula. Now, I know that I have to claim the expense first under the specific deductions, but I think to myself, well, out of my 100,000 expense, I've only deducted 80,000 under the specific deduction. Can I not go and claim the balance of the 20,000 expense under the general deduction formula, because the expense qualifies for both? And the short answer to that is absolutely not. The legislation is very clear that once you've claimed a deduction under the specific deductions, you cannot try and claim any portion of the expense that was disallowed under the general deduction formula.